Robschild, no investment advice. Welcome to the show where we view financial markets using technicals, macro, Ben Graham's investment philosophy, and crystal ball gazing. Today is Wednesday, October 16th, 2024. Today's episode starts with mentioning the fact that Thursday we have another initial jobless claims report coming out. If you remember from last week's Thursday show, I believe, I talked about how we had driven up massively in initial jobless claims. And this is one of the front runner leading indicators in terms of if, we're headed into a real legit recession where everybody's losing their jobs and panicking and the stock market crashes and everything happens. And so tomorrow's report could be very eventful. As you can see, the current view goes back to December of 2021. The last reading of this for October 5th was a huge surprise to the upside. A lot of people filing for unemployment, the job, initial with the weekly initial jobless claims. Every one of these data points is a week. And so, it could just be an extraordinary event from October 5th, but, this might be the place where the Fed saw this coming. Again, Jerome Powell, before the first cut, said specifically, we're cutting because we see inflation seems to be relatively under control and we don't want to see, his words, further weakness in the labor market. And if we're going to see further weakness in the labor market, it will show up here before it shows up anywhere else. If we have a surprise to the upside in this chart, we would expect strongly for the stock market to start showing some, bearish movement down, 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 like day after day. Again, this could just be a one-off event. I think it's more likely for us to actually head back down in jobless initial claims, seeing as though we had this big spike here. But this is something worth paying attention to very strongly right now. Next topic of today's episode is Taiwan Semiconductor's earnings. As in a previous show, it was yesterday or the day before, there was a major semiconductor company reporting not such good earnings. Will the other semiconductor earnings, companies follow suit? And if so, and imagine if we have both. Imagine if we have Taiwan Semiconductors show really weak earnings or, not explosively higher growth earnings, and initial jobless claims shoots up even higher, to new highs that we haven't seen in 3 years. That would be very scary for investors. You'll see a very big down day tomorrow, especially if you have the combination of those two things together. Nothing has changed in the daily reminders. If you want to hear me read through them, watch Monday's show. Crystal ball reading remains bear market very soon. And if this data tomorrow comes out weaker than expected, it's literally tomorrow. So the crystal ball is saying and if it's not tomorrow, it's still coming soon. And I am of the belief that the Fed won't cut fast enough to save the economy. Not only do I believe that the cuts, they won't be able to cut as fast as they would like to because of the fact that inflation is higher than we'd really like it to be. Combine that with the fact that we have a lot of debt, which means fiscal dominance, which means raising rates doesn't slow things down enough. Cutting rates doesn't speed things up enough as well. It's the other side of the same coin. On top of all of that, the truth of the matter is when the Fed does a cut, it doesn't immediately, it's not like a light switch to turn the economy back on. Usually, you don't see the full effect of a rate cut for as long as a year after they do it. And so, and not only that, we're still strangling the economy. Sorry, I said I wasn't going to read through the daily reminders, but these things are so important to be having in your head. These are dangerous times for the stock market. The S&P 500 in its current price with its PE ratio, with its valuation, and all the other daily reminders. Watch Monday's show to go through all of them. But there's a big storm coming. I think it's going to surprise a lot of people. On to some charts. I wanted to start with AA. These are investment grade corporate bonds. This is the spread between those bonds and treasury bonds. And, these things essentially can function like treasury bonds. They're a lot less likely to go bankrupt than, say, junk bonds, for example. But this is still worth paying attention to with the credit spreads. And I bring it up because we're at historically tight credit spreads right now between AA's and treasuries at 0.46. If I scroll this out, the chart going back to 1998, we did get as low as 0.38 in September of 97, and we were around 0.4, just above 0.4 for a while. But this is like, we don't often see 0.46. We rarely get that low over the past several decades. So I bring this up as a caution, because when credit spreads do start spreading and going the other way, and people start getting rid of bonds because they're like, are they really going to pay their payment? And this involves institutions too, institutional risk on missing one payment. I mean, you're talking about billions, or even, I don't know, maybe even trillions of dollars of assets, especially in the bond market. It might be in the trillions for AA bonds. It probably is. But, one payment, one late payment by one day can be a massive amount of money. And so that's why these spreads can widen even a lot. Like in 2008, it got up to almost 5% spread. When credit spreads begin to widen, the widening tends to make it widen more. It kind of has a snowballing effect, and that's why I'm like, we got to be extra careful here, just with this metric alone. Never mind all of the other stuff that I'm always talking about. Along with the complacency, I'll call it, of AA investment grade corporate bonds, the S&P 500 very near all-time highs. I mentioned yesterday an engulfing red candle, suggesting that this could be a reversal here. Certainly, again, if that data I mentioned at the beginning of the show comes out, it could really blow up markets today. We could see, the more I think about it, the more I'm realizing that tomorrow could really have a high probability in my mind of having a very large crash actually tomorrow. I say there's a high chance of that right now, considering the semiconductor space and where the initial jobless claims lie. But Mr. Market is sitting here comfortably, sipping his drink in his hammock, not worried about a thing. I'm surprised to see the VIX, the fear index, the pricing of options contracts, dropping today with an engulfing candle to the downside, closing below that magic 20 number. Honestly, I have a little bit of an interesting idea here on insight for the VIX. If you remember, for the past few months, I had been noting that the VIX futures curve had been showing October's contract as way higher than the rest. And it hasn't just been the past month. It's been for a year where that one contract has been stuck up to the ceiling. And now that October is we're getting through it. I mean, there's a lot of contracts that expire. I believe it's this Friday. It's the third Friday, right? Those are the normal options contracts. That's, I believe, the date of when that would occur. So that's in 2 days from now. And seeing as though we haven't seen a major bear market or anything explosive, even the VIX is getting less worried here. I mean, this is easy to see for me too, because I have put contracts that will probably expire worthless on Friday if things don't really blow up over the next 2 days. But seeing as though we didn't get all of that expected September weakness or any real October weakness so far, I mean, I get it. The VIX is taking a breather here, saying maybe everything really is just fine. which funny enough is kind of a sign that like, yeah, maybe tomorrow will really blow things up. We'll see. I think there's a higher probability of a blow up than the VIX is pricing specifically today. I think they might have had it right on Monday, and we've been cooling off. So this is very interesting. Next, I want to bring up Bitcoin. If I scroll out a little bit, we're hitting the top of this channel here. If we break higher and close even higher than that, there's a good chance in my book to go almost straight up to the $100,000 range. I mean, I'm figuring that like today we're literally on this line already. If the data comes out and it's not like crazily weak, it could give a lot of legs to Bitcoin. We could see a mania phase here. We could see a Bitcoin explosion to the upside. It's not out of the cards. It has decent probability. One market that's clearly diverging and providing a strong counter argument to Bitcoin looking bullish, the S&P 500 sitting near all-time highs, the VIX actually cooling off today. These are all bullish signs in these other markets, but the dollar is doing the opposite. Usually when all of those things are happening, the dollar would be dropping. Not only that, yields went down on the long end of the curve. I didn't bring up that. So all of those things would suggest that the dollar can get weaker here. We're seeing the dollar very bullish. Something's not right here. When you have markets that diverge from normal movement relative to each other, they eventually have to go back to each other. And so either the dollar needs to go down or the S&P 500 and Bitcoin and risk assets need to go down. It's one or the other. We'll see how it plays out. If I take a crystal ball reading, I think maybe tomorrow things might crack apart. I think we might have a huge down day. We'll call it Black Thursday tomorrow. We'll see. Last chart of the day just caught my eye because we're at new all-time highs now in the Home Builders Index, XHB. So, how believable is this market? Who's buying here? I don't know. I mean, I guess with rates recently just dropping now and credit spreads still tightening, it means that mortgages can go down. And so it gives more confidence for home builders for the moment. Really interesting markets. October is always one of the more interesting times to be really paying attention to what's going on. And that's all for today's show. That's all from me and my crystal ball. I hope you enjoyed. Thank you for watching, and see you next time. Robschild.